Imagine turning $10 into $100 in one trade or losing everything in seconds. That's the power of lots, pips, and leverage. And today, I'll explain it clearly so that you never get confused again. Hi, I'm Abigail, and if you're struggling with understanding Forex basics, then this video is for you because by the end of this video, you'll clearly understand what pips, lots, and leverage means and how it affects your money. Let's start with the easiest one, pips. Pips is simply how you measure movements in the market. For example, let's take a currency pair for instance, Euro USD. If Euro USD is at 1.1 thousand and it moves from 1.1 thousand to 1.1 thousand and one, that one, which is the difference, is what we call pip. That one pip is the difference, and that is what either makes traders to profit or lose in the market. You can simply take pip as something you either gain or you lose in a market. For example, if a trader says that they made 50 pips today, it means that 50 pips moved in their favor, and as that they made profit. So pips is simply how price moves in the financial markets. Let's talk about the second one, lots. And lot is the size of the trade that you take. And we have three main types. We have the standard lot, the mini lot, and the micro lot. The standard lot is equal to 100,000 units. The mini lot is equal to 10,000 units, and the micro lot is equal to 1,000 units. Don't let those figures scare you because the more the lot size is, the more you're going to profit or loss in a trade. Some of the lot sizes that are beginner friendly is a mini. That means if you are to take a trade using the mini lot size, you take trades from 0.10 to 0.99. If you are to take trades under the micro lot size, you are to take trades using 0.01 to 0.09. Why we call this beginner friendly is because it uses smaller risks compared to a standard lot size. A standard lot size is not beginner friendly. This is because it has high risks and it's usually for experienced traders that have spent years trading in the financial market. So, lot size simply controls how much money you make per pips. If you are making 10 pips profits in the market, your lot size is going to determine if it's going to be more money for you or less money for you. Now, the dangerous one, leverage. When we use the word leverage, it simply means that you're borrowing money from brokers to trade. For example, if you have $10 and you're using a leverage of 1:100, that means you can control $1,000 in the market. Yes, surprising, right? But one thing you should know is if the leverage is high, so is your profit, and also so is your losses. It increases your profit as well as your losses, and that is why most beginners lose money in the market because they look at the bright sides of using leverages, the advantages of using leverages, because when you use leverage, you can make a whole lot of money, even from a small pip movement, and you can also wipe your account so quickly. So you need to understand this very well. This is where everything connects. The lot, it means the size of the market that you're trading. The pip, it means how the market moves. And the leverage, it means the power of the positions of trade you are taking. For example, in a situation whereby you're using a big lot size and a big leverage, it is going to make you a lot of money from a small pip movement, or it can also make you to wipe your account very, very quickly. That is the power of leverage. So you want to use it wisely. As a beginner, you want to use little leverage or not at all. And that is why smart traders, they focus on risk management and not just the profit. Because the truth is, when you're focusing on the profit, it's hard for you to know how much you're really risking in the trade. When you put up a trade and all you are looking at is how much you're going to make at the end of the trade, you are more likely to be kicked out when you as a beginner is using a high leverage to take that trade. My advice to you as a beginner, if you're just starting out, I'll recommend that first you use 0.01 as your lot size whenever you are taking trades. I know it might actually be the smallest lot size and you might not see profit difference as much, but it's going to help you in the long run. The second is for you to focus on learning and not profit. Focus on learning how price moves, why price moves, how news reacts to price, rather than how much you're going to make from a particular trade. The third thing that I want you to focus on, don't depend too much on leverage. If you can trade without leverage, it's even best. And the fourth is always protect your capital. Always protect your capital by all means. This means before taking trade, your main focus should even be where you're placing your stop loss rather than where you're placing your take profits. Stop loss is simply where you decide to leave a trade after entry. And TP is where you decide to also leave a trade after entry. Just as stop loss is you taking your loss after the end of a trade, and TP is you taking your profit at the end of a trade. But when starting out, you should be more focused on the stop loss. Be more focused on protecting your capital, because your first goal as a beginner is not to make money, but to stay in the game for the longest time. If this video finally made you to understand what Forex is, please comment in the comment section for it so that I will know that you're learning. And if you want a simple step-by-step strategy on how I am able to trade simply, then the link is in my bio. Please like, comment, subscribe, and I'll see you in my next video.